Hey, I'm Alex Watson from Funded Finance. If you're a first home buyer and thinking, I'm going to save for a little bit longer, just wait until things get a little bit cheaper, rates drop a bit, then this video is for you. Because while waiting feels like you're just planning and prepping and getting ready, what I find, it actually might be costing you more than you think. And look, don't get me wrong, I'm not here to convince you to buy today. That's not what I do. But I am here to give you a little bit of clarity about what's actually happening and what is costing you by waiting and what you're gaining as well. So let's just unpack it a little bit, hey? Let's start with why waiting feels so good. Most people, I think, assume or associate waiting with responsibility, saving more, that's smart, wanting more certainty, totally fair. And I've heard it all before. We want a bigger buffer. We're just waiting for prices to drop. And I completely respect this, right? I know that you're gonna probably be in a better financial position next year. On the surface, these things all sound reasonable. But underneath, a lot of it comes down to fear and uncertainty. And what if I told you in many cases the fear of making the wrong move ends up actually costing you more than the move itself? I've worked with hundreds of first home buyers over the years, and the most common regret isn't I bought too early, it's we could have done this a year ago. In fact, I spoke to someone the other day who said, yeah, I don't want to hear it, Alex. I know we should have bought 2 years ago. But most people don't actually know that they could have bought 12 months ago. Now let's get into the numbers. Let's say you're paying $550 a week in rent. That is $28,600 a year, right? Which just disappears, gone. Now imagine you plan to wait 2 more years before buying. That is $57,000 spent on rent instead of building equity in your own home. And in that time, let's just say the property you've got your eye on priced today at $600,000, which is low, rises just 5% annually. That is, again, pretty modest and low in most markets in Australia. 2 years from now, it's sitting at $661,500 to be exact. So not only have you spent $57,000 on rent, but you now need more deposit and a bigger loan for the exact same house. It's like running toward a finish line that keeps moving away. This one comes up all the time. I'm waiting until I've saved a 20% deposit. But let's just be honest for a second. Avoiding LMI, lender's mortgage insurance, sounds smart. And it can be, but not if it means you're locked out of the market while prices rise. And a 20% deposit on a $650,000 property is 130 grand. 5% deposit, 32.5. Again, we're just looking at very small purchase prices. Now, yes, you pay some LMI in a 5% scenario unless you're eligible for first home guarantee, and a bunch of other stuff can help you avoid it these days. But here's the question. Would you rather pay 10 grand in LMI now and start building equity, or save another 3 years, pay 80 grand more for the same house and lose all that rental money in the meantime? Sometimes paying a little bit more upfront puts you years ahead. That's not a financial theory. I've seen it with my clients dozens of times. Here's something else people don't consider. Government schemes, they don't last forever. They change, they disappear, and when they do, it's often tens of thousands of dollars gone. We're in a situation at the moment where we're seeing scheme after scheme after scheme after scheme. I've seen in my career, schemes completely gone. Right now, first home buyers may be eligible for the first home guarantee. 5% deposit, no LMI. The Queensland First Homeowner Grant for new builds, stamp duty concessions. But what if those disappear next year? Again, I've actually seen this before in my career. And what if interest rates shift in the meantime? A 1% increase in rates could mean hundreds more per month in repayments, even with a bigger deposit. Waiting doesn't mean the market stays still. While you save, it keeps moving, and sometimes it's just not in your favor. Let's step away from money for a second, because there's another cost no one talks about, and that's the emotional toll of waiting. That's the stress of not knowing, the feeling of being stuck in limbo, watching friends buy homes while you're wondering if you've missed your shot. Buying a home is about more than just property. It's about control, stability, and forward momentum in your life. And when you wait without a plan, you just feel like you're always playing catch up. And uncertainty, well, it just wears people down. And I've seen people frozen by uncertainty, unknowing for years and years and years before finally they pulled the trigger on something they probably could have spent 200 to 300 grand on, less a few years earlier. Here's what I recommend. Instead of waiting blindly, hoping this is gonna happen, get clear on where you stand right now. That doesn't mean buying tomorrow. It means running your numbers properly, mapping out your deposits and costs, checking what grants or schemes that you might be eligible for and what you're working towards or planning to use, stress testing your repayments at today's rates and higher, and figuring out if I could buy now, would it actually make sense more than waiting? And sometimes the answer is yes, sometimes it's not yet. But either way, you've got a plan in place. You have some certainty and you're not just hoping the market will do what it does. You're strategizing with your future in mind. So if you've been thinking of waiting just a little bit longer, make sure you're not waiting without a reason. The market doesn't wait, interest rates don't wait, government support won't wait, and neither should your future, not without a clear plan in place. I'm Alex Watson from Funded Finance. Thanks for watching, and I will see you in the next one.